Welcome to the Fintech Founder Journey podcast, where we explore great fintech products, great fintech businesses, and great fintech leaders. I'm your host, Mike Scott, and I'm also the co-founder and CEO of Nona Digital, an expert firm that accelerates product development for fintech and blockchain scale-ups. In today's show, I'm joined by Jason Atkins from Cake Equity, and we'll be exploring his journey and insights from building a great business that makes equity simple for startups everywhere. Today's episode is sponsored by Nona Digital. Working with us to create or accelerate your fintech product means you get access to deeply skilled and experienced engineers and designers that have been building products together for a very long time. You get the benefit of a studio that is big enough for no key person dependencies to exist, but small enough so that you're always close to the principles. And you get the benefit of our reusable component library, which basically just means we're often able to build your product faster than anyone else could at a comparable standard. To get in touch with myself or one of the principals, head over to the website nona.digital to book a consultation. And now on to the show. Jason Atkins is trained as an accountant and has got a strong background in finance across companies like MasterCard, the Awesome Group, Zup Property, and Enhanced Society. Today, though, his main focus is as the co-founder of Cake Equities, where he is leading a strong team to make equity easier to use. This is a topic that is typically complex and difficult to get right, and these guys are really making a difference to founders to help them raise money the right way, to give shares to their team, and to do it in a compliant and centralized way. Jason is a pretty generous mentor, giving his time to River City Labs and more recently to StartMate. Cake Equities is growing. They've got a team of around 20. It might even be bigger since we last spoke. They are the market leader in Australia, and they're embarking on some pretty aggressive international expansion, which I'm sure we'll talk about. Jason is leading a business definitely that's worth keeping an eye on. And what's more, he's just a really nice guy. And on that note, welcome, Jason. Great to have you on the show.
Yeah, great to be here, Mike. It's been good learning a bit about you and Nona as well. And yeah, I'm really happy to be here.
Cool. Let's get stuck in straight away. So, look, I mean, what's the backstory, Jason? So you've got a decent career. You know, you're pretty entrenched in the financial services world or the fintech world. But how did the idea for Cake Equities come about, and what was the original hypothesis that you set out to prove or disprove?
Yeah, so at the time when the genesis of Cake started, we were actually in the blockchain space. So, and we love the velocity, of crypto, and the way you could fund projects very quickly. But at the same time, we were trying to find product market fit, and we were looking for something that I suppose had a little bit less regulatory risk and a little bit less market risk, like not to hassle the space. I'm a big fan of the space, but while we were there, we thought, well, if we can use technology in a different way, and apply it to more traditional equity-related, problems, then we can really supercharge, the velocity of equity, and therefore help more companies get funded, more founders have exits, more employees have exits, and just generally help speed up the way private equity works globally. We've always had a very big vision, of trying to make it to be a global product and a global platform. And I think that comes down to some of those founder mental illnesses that we have.
Yeah, totally. And I love that because, for those listeners that understand the Web3 space or the crypto space, the velocity is crazy fast. Some good, some bad. And I love that you sort of took that velocity and went, well, how do we sort of bring this into the regulated environment, into the more sort of traditional space to sort of try and keep that velocity, but not bring all the uncertainty and the regulatory uncertainty and the nonsense not that all of it's nonsense, but there's a lot of nonsense into the space. So I love that sort of bridging of the two worlds.
Like we're trying to find a middle ground. So, when we went back to, say, the traditional equity space and to do like a reasonably simple transaction, just say you're trying to raise like $2 million for a startup, you could be looking at $20,000 to $30,000 worth of, professional services fees. And just the nuts and bolts part of it can take, 2 or 3 months. And that's on top of all the pitching that you need to do and all the investor work. And then you're trying to get product market fit and everything all, at the same time. So, the first thing we thought was, well, we've got to solve this for founders. We've got to help them understand how this is all going to work. And it wasn't even really like a difficult concept to us at the time. It's like, if we can just we just standardize the documents and then we can digitize them, and we build some workflows, and we kind of, build some trust into that. Then, we can really help to sort of shorten up the time and the cost of these capital raising transactions. To take a little bit of a step back, we knew we had to make a management layer first, because unless you kind of know who owns what, and it's connected into, say, the regulator in your country, like in Australia it's ASIC, in Singapore it's ACRA, in the UK it's Companies House or whatever. So unless you can kind of have the regulator included, have the legal agreements included, you can't really make big progress, because everyone's then got to go still and update the regulator and update the lawyer and bring all the pieces together. So our vision was, if we can bring enough of these pieces together, standardize and streamline them, we can make huge progress. And we have done quite a bit of that. The employee equity stuff sort of came a little bit later. While we were looking at cap tables and looking at the raise, we sort of discovered that, setting up and managing equity plans for teams is like diabolically difficult as well. And literally like 9 or 9.5 out of 10 that we looked at was like totally broken. So we're like, okay, we better add this in here as well, because it kind of goes together pretty nicely.
So early on in the business, you had quite a massive pivot. Talk to me a little bit about what that pivot was and what the experience was of that pivot. So you've kind of hinted at it, but just talk us through that process of sort of, we're heading down this direction, hold on, we need to completely go that direction. What were those two sort of pivots, and what was the experience of going through that process?
Yeah, so I still feel like the first big pivot was from the blockchain space to traditional equity. I still see that as a pivot. We were still trying to help entrepreneurs and innovators to raise capital. So that was the first big pivot, and that was more it was a pivot to the type of currency that we were working with, and it was a pivot based on the customer as well. We went with more of a general market customer as opposed to a crypto customer. That was a big success, really. How we did that was we went back and did really grassroots research. We went and spoke to 30 potential customers. We really tried to understand how they did it. They all basically said spreadsheet, email, PDF, accountant, lawyer, like every single one of them. And that was a good sign. Plus then we went to like accelerators as well. So like market leaders that kind of knew the problem. And I'll still remember I spoke to Aaron Birkby, who's one of the leaders here in Queensland. And he was at River City Labs at the time, I think as the entrepreneur in residence. And he was like, every single day, this is just comes up like all day, every day. The poor founders, they're just pulling their hair out. And, that was a big one. And then I think for people out there that are trying to find out what problem to solve, one of the lessons I learned early on was like, when you can really feel pain in the customer's voice, like founders and CEOs are really affable. They're really positive. Like nothing really gets to them. They're going at 1,000,000 miles an hour. But when you ask them about their cap table or ASIC or whatever, they just they want to.
Yeah, totally.
And at 1,000,000 miles an hour. So I was like, okay, we're onto something here.
You're so right, and it's like to sort of drive that point home even further. I have the luxury, like you, of speaking to a ton of founders, and there's this point that I think a lot of people don't realize. Experienced founders will because they would have been through this and it would have hurt them. But when you're raising capital, it's often like a full-time job, and you got to think about what that means, right? Because what it really means is that as the founder, if you're sort of raising capital, you're basically taken out of your business for that time. So then there's the question of, okay, but who's left?
It's a nightmare.
Yeah. So who's left to run the business, right? So you got to really ask these difficult questions of like, we're already in startup mode, which means everybody is everything. Now I'm going to be taken out for X number of months for fundraising. Mm. Who's actually taking care of the sales, the operations, the strategy? Like that question it really hurts. Like I see it hurt businesses. Look, when you're very experienced, you've been through that, so you know that. But first-time founders and first-time raisers, it's a big deal, man. It's like the impact on your business is massive. Besides, as you say, just the pain. So I can just tell you anecdotally because not that you need more validation, but I can tell you that everyone I speak to is like, this is a bloody nightmare.
Yeah.
So yeah, I mean,
we can't solve the whole problem for them for sure, but if we can just like help them raise like in half the time or save half the admin, we're so proud to be able to make that change. And like I'm doing it again now, even with all the experience I have now. it's so hard to raise money with all the success we've had and all the experience I have. It's so bloody hard, and so we can help with that. And then the second pivot we did, like just to share, so then we did the research, we kind of rebranded as Cake, and we got a really great agency out of Brizzy called Joseph Mark to help us with that. And that was like such a great decision because the memorable, like it's so memorable and it's so relatable, and I can't take credit for that, although I guess I did like approve it, but like that was such a great thing for us. And obviously in conjunction with my co-founders and everything, but like yeah, so we rebranded and we launched, and then it was just like, right, let's get one customer. I remember like we had like a big discussion. We're going to get one customer. I think it was like April that year, 2020, I think. Yeah, and then like 2 customers, and then 3, and it was like so basic, and it was like the day one stuff was brutal. We didn't know how to do anything. We had like a little bit of software and all the smoke and mirrors behind the scenes and everything. It was pretty gnarly, and then we started a law firm actually because we were really nervous because we're in a legal space. And so we had a law firm for quite some time while we were learning. We wanted to make sure we were doing the right thing. And then that was the next pivot was pivoting from like really being a technology enabled services firm to a SaaS. And we did that at the end. So Q3, Q4, 2020. And that was really hard as well. Like that was a really, really hard process. Like everything that you've done has to be like thrown out and replaced, and you put all these bits of software in place to help you manage everything. But then like it's all like nothing talks to everything else, and you just have like I remember like at one stage we didn't even know how many customers we had for like 2 months.
I just love it. I love the honesty and the rawness, man. It's great. Something I want to ask you is, Cake at this stage is, correct me if I'm wrong, but this is sort of some of the notes that I took, is that it's a volume play, right? So it's about gaining market share. It's about getting quantity. It's not a revenue play yet, and that's quite a common strategy. But this requires funding as far as my observation goes and my experience. But you guys have only raised 2 seed rounds. I guess my question is, how have you gotten to be the market leader without raising significant funding? I'm aware that you're raising funding now, but talk to me about like how you've gotten what seems like really far with what seems like very little amounts of funding. Talk to me about that.
Yeah, I think part of it comes back to choosing a small market to start off with. We use the principles of disciplined entrepreneurship, which was the book that's put out by Bill Owlett, I think it's pronounced. He runs entrepreneurship at MIT, and it talks about choosing a big enough but small enough market sort of thing in the beginning and really owning that. And so I think that's sort of part of what we did well. And we doubled down on our customer really well early. Like we really understood, well, through trial and error and a bit of pain, which customer we wanted to go for. And so I think by being laser focused on the type of customer, really bringing everything that the company had into that small niche and going at it with all guns blazing was a big part of, I think, our success. And then I'm not exactly sure. I think not having heaps of competition was good. It's not always nice to pick a market where the competition isn't so good, especially when you're starting out, if you can, or at least a little niche within a market, like try and find a space where you don't have to like fight big dogs every day. Like we could have, for example, gone up against Atomic and gone for the bottom end of the listed market or whatever, or we could have tried to partner up with PwC and go into mid-market, and we may have been successful there as well. So we had a lot of opportunities in different spaces that we could have gone, and maybe we chose the right market, or maybe we got lucky. Also, we really love what we do,
it's what's so cool listening to you.
We were like, let's do something that we love and help people that we really care about. And like the passion is just there for everyone to see. And I think that has helped us a lot.
Jim Collins, I'm sure you're familiar with this, but maybe the listeners aren't. Jim Collins has something called the hedgehog concept, which basically stems around like a hedgehog does one thing really, really well. It does one thing better than anything else in the world, and that's curl up into a ball and spike everything that tries to eat it. And that's how it survives, right? And he has this Venn diagram, which is, pick something that you're deeply passionate about, that drives your economic engine, and that you can be the best in the world at. And listening to you speak, it just feels like you've found that. It feels like you've got the thing you're passionate about. It drives your economic engine, like there's a business there, and you're absolutely trying to be the best in the world at that one thing. And it's rare to find that. It's rare to find people that have picked. It's very difficult, to be honest. Let's not underplay how difficult it is to find that thing. It's an exercise in courage. It's an exercise in strategy. Yeah. It's an exercise in trial and error.
Really hard. It was really hard,
hard, man.
to and like, especially with what we did, and you said like it's not so much a revenue play now, like to give up all the good customers that had money and chase all the little ones with no money was really hard.
Great strategy.
Yeah. So
no, you guys are nailing it.
Just like pure insanity that got us through, like, and sheer willpower. But and we did the same thing when we went global, you know, like we sort of said, well, look, let's go find all the customers that are like this in the world, you know, as opposed to go and try and pick a different customer. And again, I think that's going to help us a lot as we scale globally, because we can really leverage on all that brand power that we have in that very early stage, seed Series A sort of stage where we're sort of winning. Yeah.
So look, I want to change gears a little bit, but something that you're passionate about and clearly are expert in is very topical at the moment. So, you know, currently the talent markets are crazy. You know, if you're building a tech startup, fintech particularly, even more specific in Web3, getting excellent talent is probably the most difficult thing. And the thing that I hear the most about raising funding, I guess you might have a different take on this, but from my sort of observation, it's relatively easy at the moment compared to how it's been. If you have a strong fintech, there's a lot of capital around. But once you've got that capital, turning that capital into velocity is really difficult. So now you've got tons of money, you've raised a Series D, you've got tens of millions of dollars, but you can't hire enough talent. So how do you use equity to build a great team and a great culture around ownership? Talk to me about like some things that you've seen work, some stuff that you've done around ESOP ESOP schemes, and just kind of throwing equity into a strategic direction to help build, nurture, and grow an amazing culture and an amazing team.
Yeah, I'm more than happy to cover the ESOP. I'll just quickly touch on the wider aspects of team building. You may cover this a lot, so you can cut this out if it's a bit, recovering old ground.
No, please do.
I feel like, I don't know who's listening, if it's early stage founders, the ultimate thing, which comes back to my last point as well, is like, if you have purpose and you have passion and you are on this incredible mission, it brings people to you. I used to talk a lot about being the train. Like, this is this concept. If you are moving at speed and shit's happening around you and there's good people on the train, like it really does steamroll into just continued success with investors and team and everything. And then like at Cake now, like there's just so many good people with energy and it's going like this, like the new people just come in and the energy when the team builds is like, it's wild. Like we've got a creative, healthy lifestyle channel in the Slack and everyone's putting in there what they're doing for their health and it's just going off and everyone's just really vibing it. So like, there's a fair bit that goes into it. And I think, it comes a lot from the founders and the culture and the vision and the mission. How you can then, build on that with options is it's definitely a really cool tool. I think all the big tech companies have been using it wonderfully well for years. I mean, to be brutally honest, the number one thing is like you can give someone $10,000 worth of equity, like via an option plan in 1 year, and in the second year it can be worth $50,000. And in the third year, that can be worth like $150,000. This is an unbelievable driver of engagement and retention. And retention is like half the battle, right? Like acquiring team is very hard. Yep. Retaining them is equally hard in the current market. I mean, whatever stage you're at, there's a whole level of SaaS above you or tech above you that is just paying 20 to 50% more than you can afford. And so retaining people is really like ESOP's critical for that. So for example, make sure, the plan is set up over 3 or 4 years. So perhaps 4 years and, you're getting 25% each year. I have also seen more recently companies doing more like 10% in the first year and 30, 40% in the fourth year. So as the years go by, because they've got so much IP, they're so valuable to the company. The amount of options that they're earning and the dollar value of those options, especially if the company's been raising at an increased valuation of every year, can be really substantial and make it very difficult for those people to leave, even for like an offer from Amazon or whatever, which I just saw today. They put their base salary up by like 65% or something to fight this exact battle, that we're all in. So I think it can also, like, right on day one when you're hiring, you need to understand how to communicate this stuff. And if you're not used to it, you need to get advice, you need to get support, you need to talk about it in the offer, you need to talk about it in the meeting, and you'd be surprised how hard it is for the employees to understand what you're saying and how scared they can be. Like, you can basically tell them, here's $20,000 worth of free options that might be worth $100,000 next year, and they might and do hear, oh, are you deducting my pay by $20,000? And am I going to have a tax bill? And like you can really mess that up. So making sure that you understand how to communicate it to them, how to sell the value of it, and build it in, to that onboarding process is really critical.
So what, like I want to dig in there, because this is like really getting to nuts and bolts, which is great. Like, can you think of like one or two pieces of advice to founders on that exact point, like how to communicate that? Because that's fascinating what you've just said. In your mind, you're clear that you're saying something awesome, and yet it can be heard as potentially something threatening. So do you have any do you have any nuggets of wisdom or pieces of advice on how to communicate that? Because I think people listening might be sort of ears pricking up now.
Yeah, I think you have to strongly word the base salary is generous and at market, plus, in bold, we have options on top of our generous market salary, right? That this has to be clear, because this is not understood. I don't know. I'm always shocked when I see it, right? So
yeah, interesting.
Generous market salary, if it's plus bonus, explain that, like plus cash bonus, plus options, and stack it all up on top, right? So it might be 100K, plus $20,000 bonus, plus $20,000 worth of options, and really spell it out. Like, I would highly recommend that. Yeah. When you're hiring and you're putting your job description together, like, slightly off track, but talk about your culture, talk about your social responsibility, talk about, what's amazing about life in your company, really accentuate that. And then talk about that you have an ownership culture within your company. At the all hands, we always talk about, how we're increasing the value of the company and how we're increasing the value of our options. We have a strategy about organizing exits for our team. Like, this is another way to really get them to understand what are my options actually worth? This is another big gray
what's
area.
The liquidity event?
When's the liquidity event? So talk about it. So in Australia, we've got this thing, you can't sell it in the first 3 years. But so say someone's coming in, in the first all hands, they hear a discussion about how some of the early team members are now coming up to the end of their third year. And we're going to be organizing a secondary market and allowing them, if they would like to, sell down a proportion of their options. This is a wonderful way to try and connect what can be a bit of an abstract number to something very real. And when it's real, then they're going to be more aligned. They're going to be more inclined to value it and want to work for it. And then the engagement and retention aspects of it really kick in.
So, Jason, I'm interested in your take on the following. So, in my observation, not experience, but my observation, when you're really small, everybody gets equity. Everybody gets ESOP in a product business. And maybe that goes to 10 people, 20 people, 50 people, I don't know, maybe even 100 people. But when you become a scale up, like you've hit product market fit, you now raised series, whatever, B, C, D, you might have hundreds and hundreds of staff. And at that point, not everybody is critical. And the reality is that incentive to give equity to keep everybody on board is not for every single person in the business. It's for 50%, 60%, 70%, whatever. What happens there? Like, is there not a risk of actually building a little bit of a toxic culture, because some people have got equity and some people don't have equity, and now you've got the haves and the have-nots, and then equity becomes this, like, I don't know, like division of classes of people in the business. I'm just interested to know, like, if you've watched that evolve and like how that plays out.
Yeah, for sure. Like everything in a startup, it's just like change, right? So In the beginning and like most things in the first few years, the leaders, the founders normally make the cultural decisions. I think it's definitely the vast majority and best practice to have everybody involved in the first period. So certainly, all the first 10, 20 people, and as it's scaling, everybody's involved. You've got that culture of ownership. You really don't want anybody leaving unless, of course, you need them to. And it's a great way to help retain and engage your team, right? As you're scaling, there's heaps of stuff that goes on. So once you get sort of around C, getting towards your Series A, you're probably going to run out of options, and your valuation's going up every time as well. So there comes a point, I think, in most startups' life, maybe it's around the 10 employee mark, where you need to reset your policy. It's probably still that everybody gets options, but they're going to get less options, right? Because the company's increased in value. Then you need to make a new option pool. And then you have another decision to make again. How am I going to break this up? Am I going to start to have like tiers? So for example, you might have, heads get a certain percentage and managers get a certain percentage and perhaps, employees get a different percentage. This is a very normal way to think about it. There's some great research out that I can share as well. There's normally a difference between technical and non-technical employees as well. So technical employees traditionally or based on recent reports do get more options as a percentage of their salary and, based on seniority. So as you go through Series A and Series B, you'll normally see, I guess, a more, as you say, professionalization or corporatization of these practices and principles, while, in my opinion, still trying to maintain, as much of an employee ownership strategy and structure as you can, because, as we talked about earlier, engagement, retention, and hiring is very difficult. And, this is a great lever, especially if you're growing your revenue at 200-300% per annum and you're able to raise at higher and higher valuations every time. It's a really fantastic way to incentivize and retain your people.
Yeah, very, very interesting. It's certainly becoming sort of an expected part of at least a senior engineer's compensation when working for a product company for the reasons that you've said. And there's just more and more scarce because there's more and more startups. So it makes sense that the highly technical, experienced guys and girls are just in more demand, right? It's quite simple economics, I guess. So, Jace, look, I want to get to sort of rapid fire questions pretty quickly. But before we do, something that I noticed when, when we were chatting, and this is coming through again, is you're in a high growth business. You're building a global business. You're in a business that's cool and fun, but pretty bogged down in like some difficult stuff, as you said. I mean, this is legal. This is compliance. But you're so chill. You seem so chill. You seem so relaxed. You seem like a really cool dude. What I want to ask you is just like,
I'm sure that's not true, but yeah, okay.
So but I want to get into the detail. I'm not just sort of blowing smoke up your ass. Like I actually want to get to a question, which is like, unless it's all just a total farce and you're just faking, well, awesome, then you're a great actor. That's awesome. But I don't think you are.
No.
What are some things that you do, Jace? Like what are some things that you actually do in your day or your week to be deliberate about this? Because I don't believe that the stuff happens by mistake. Like, talk to me about your daily routine or your diet or your rituals or like whatever it is that you do to sort of try and stay sane and mentally healthy and sort of live a good life while you're doing this pretty high intensity involved stuff.
Yeah, so I think we talked about this briefly last time, and it's I feel like it honestly has been, and I don't mean this to be discouraging to people at all, but I feel like it's been, like decades of just constant growth and perseverance. And, so the early career was all about like, I just wanted to, become do something that was really hard and get far in my career, in finance. Okay. So I did that. And then I'm like, all right, well, I really want to be in tech, right? But I had no idea what to do. So then I had this 2-year period of just being like such an idiot, like everywhere I went. And and there's some really important lessons I learned in there. Like, I'm just trying to get 1% better every day. Like, I remember that was when it was really hard and I was really, really like taking the 2 steps forward to go 1 step back. the 1% better every day mindset was critical for me to get through that and fail so often and still have a lot of self-confidence, because you take a real beating when you're in that phase, but you have to still be really upbeat and confident and pushing ahead all the time. So just having that mindset was critical there. And then like these days, it's evolved a lot, as I'm sure. So to cut a long story short, you said was this the rapid fire bit? Anyway, so cut a long story short.
No. This is the last one before we get to the rapid fire one. So take your time.
To cut a long story short, now it's like, there's a whole stack of things that are there that form the basis of just being calm and smiling, and and I go back to it like every single day. I go back to, what are the things I need to do to win the day? And then on top of that, I can do the things to grow the company or whatever. So that's like, without like, it's my health. Like at Cake, we talk about our health like every day in the company, and with my co-founders. So like, I constantly look at my health. I constantly work on my mental health. When I needed it, when COVID hit, I went and saw a bloody psychologist to help me get my head straight, because I just know if my head is not straight and my body's not strong, I'm not sleeping, I can't do this face all the time, and you notice it, like when and the things to look for, like if you can't take new information in, that's a big sign for me. Like if someone's talking to me and I can't hear them, which like, I don't know if you experienced this, but like this is what stress and anxiety like manifests itself as. And so like when that's happening to you, you need to go back and you need to like reset yourself, and you can do it every single day, and then not all days are great. So work out, get your health straight, get your mental health straight. Meditation was a game changer for me. I know everybody talks about it. It's almost a bit naff now, but like there's been a few things in my adult life, like scuba diving, right? Have you scuba dived? It's like there's the pre-scuba diving person and then there's the post-scuba diving person. You're down there and you're like, fucking hell, like everything's so amazing down here. Meditation is the same, like after you've meditated, you are never the same as before, especially once you reach that point where you're like, whoa, like my brain is different. It is way more clear and powerful than it was before. And now I'm like a few years in. And I don't do heaps either. I've never been on one of these crazy meditate for a month things in India or anything like that. I just got like a pretty simple app and I just do like 5-10 minutes and stuff. I'm currently doing the Sam Harris waking up thing.
Yeah, waking up.
It's amazing.
Yeah,
it's taken it to another level. So anyway, like I'm sure it's just like it's like a long answer.
No, but it's good to hear.
There's heaps to it.
It's good to hear, and hearing this, especially if people listen to the podcast every episode, it's really important that people hear this, that it's not just this out there thing anymore. This is actually a tool that makes you a better business person, a better leader, a better thinker, a better analyst, just better in every way. It's not a separate from business thing.
And I don't do it for myself, actually, to be honest. Like, if I wanted to do things for me, that would be all bad habits. I do this for my family. I do this for my company, my team. I do this for the community, because I can operate at a level where I can give so much more when I do all these things, which is real. No. It sounds a bit like I just canned that.
It's very real.
That's where it's at.
I fully relate. Basically, I just say I'm just a total dickhead if I'm not exercising and meditating. I mean, I just say it a bit more bluntly, but it's true. I'm just an asshole. Maybe I'm an asshole anyway, but I'm definitely an asshole when I'm not meditating and exercising. Yeah. Luckily, I've done both today, so I'm nice now. Jace, I want to flick to rapid fire questions. So these are just sort of quick questions, quick answers. First thing that comes to mind. So first one is, what scares you in business?
I don't know. I'm very difficult hard to scare me, to be honest.
Cool.
I'm not a very scared kind of person.
Love it. What content are you consuming currently?
I really like the All In podcast, which is a shout out to one of my investors, Jay Cal, and I just love that podcast at the moment. It's a killer.
So good. What is the last book you read cover to cover?
I very rarely read nonfiction, but I recently read the book Dune, like the sci-fi classic. And it was
Cool. Yeah,
awesome,
cool.
man. Super sci-fi, but heaps of really good philosophy and stuff in there. It was really, really good.
What is something that you're doing in the next 7 days to improve yourself or your craft?
I'm currently doing an 8-week challenge, which is about working out 6 times a week, eating really healthy and not drinking. So that'll go on for another 5 weeks.
Nice. So look, we've covered a lot of stuff today, which is great. We've jumped around. Of everything we've spoken about today, what is the one thing that you would want the listeners to leave this episode with?
Connecting to your purpose, connecting to your passion, and try and get just better every day. And then just smile and don't sweat the small stuff off the back of that. And I think you'll have a really good time.
I love it, man. Jason, do you like to be contacted or followed? And if you do, how can the listeners best contact or follow you?
I am on Twitter. I think I'm Scando Jace on Twitter. I do get on there a little bit. I don't know if I'm followable, to be honest. I follow Cake, I think LinkedIn's actually my most active. So get on LinkedIn and friend me, I'll friend you. I use it more like a social platform than anything. And so I'm most active on LinkedIn. So hit me up on there and I'm pretty responsive. That's probably the best place.
Awesome. Jason, thanks so much for making the time. Really, really awesome to chat to you. Really inspirational. You're building an amazing business. Appreciate you taking time out of your schedule to share your insights and your journey.
Yeah, likewise. Great platform, Mike. Great to meet you. And keep doing my best. And thanks for having me. Cool.
And to the listeners, I hope you got some value from today's episode with Jason Atkins from Cake Equity. I definitely did. I think my main takeaway was just something that Jason said towards the end when he said, it's a big tell when somebody's speaking to you or you're being given more information and you can't take it in, because I'm just sitting here going, shit, man, that happens a lot. I actually I need to look at that because that happens to me a lot. So it's kind of a bit of a wake-up call for me. I found that quite powerful. What a humble guy, what an open guy, what a vulnerable guy, building a great business, definitely a business to follow. Thanks for listening to the show. If you'd like to discuss your fintech or blockchain project with us, you're welcome to book a call with myself or one of the principals. Just head to our website, www.nona.digital, and I'll be back next week with another episode to explore the fintech founder journey.